You said we were going to do
bullshit.
Is that kind of like a Rocket Mortgage prequel? It's not worth anything at all.
No,
but you can say that you went through the motions.
We can do that. We can do that for sure. We can do the pre-bullshit prequel. So.
Yeah. Well, I'm still wondering if your glasses are recording.
They are recording.
Shut up. Seriously? No, they're not. I was gonna say because with mine, the little light is on right here.
Okay. Oh, you have one too.
Well, I don't have one right now, but yes, I have them. Yes. The scary thing is that when you have those on, don't go to the bathroom with those on.
Okay.
Be careful. Assume that whatever you're looking at, everybody's gonna see.
Yes. Yeah. I have Meta giving me secrets all day of what to do with my life, how to even go to the bathroom. So I'm good.
Well, now that you got that down, the world is your oyster.
There you go. There you go.
The world is your oyster. Now, we are going to talk today with one of my favorite people. And who would that be? You. This is Michael Perel. He is the branch manager of, whether we call it guaranteed rate or rate, but legally speaking, we're going to call it rate, right? Okay. And I would like you, Michael, to tell me one thing about you that I don't know.
Wow. Well, let me first thank you for inviting me. This is my first podcast. Many more to come for sure.
Yes.
Wow. Thing that you don't know about me.
Mm-hmm.
I don't like mortgages.
You don't like mortgages?
No, I do not.
That right there, we just opened Pandora's box. He doesn't like mortgages. Okay. Well, let me tell you, I've talked to some people, and this is what they say about you. Michael is a leader who is a great and dedicated person. He's passionate. He wants to help his team grow, and he always puts the spotlight on his team. This person says, I've never worked with anyone that has those qualities as a leader, but also stays humble, willing to help anyone, even when they're not part of the team. He has a heart and compassion for the team, but also the families we serve. To me, this is priceless.
No, I paid a lot of those people to give you that, by the way.
Well,
whoever sent that.
Whatever it was not enough. But when I looked at this, I said to myself, that's pretty much, that's Michael. And when I told you, you're one of the reasons why I am at Rate, is because you're a branch manager. Everybody knows that. But you're a branch manager, which means you don't compete against the other loan officers. You manage the branch. You're involved in every file. And you help us get from the beginning to the finish line. And I have never been at a company where you're at the title company and the closer is telling you how much they appreciate the communication from Michael.
Thank you. Well, I take pride of having a branch that's not totally focused on Michael Perel, right? It's a branch. It's, I'm down to 7 loan officers now. I was at one point I was more, but I believe in less is more, that whole theory. But the main thing is that I want to have a branch that focuses on bringing Kimberly Lang in the community. And what sets us apart is communication. What is good mortgages? I said I don't like mortgages. I don't like the actual industry because it's a lot of competition. It's a lot of people going against each other. There's different lenders, there's different realtors, there's different title companies. It's a very competitive market. It's not for the weak, for sure. So if you're still a loan officer in this environment, you've made it. Okay. And there's a lot of, there's a statistic out there, I don't know the numbers, but there's pretty much 70% of all loan officers that were loan officers during the COVID years are no longer loan officers.
Wow. Well, I probably know of half a dozen just right off, just immediately.
Correct. So, but the loan officers that have remained in the industry right now those are the loan officers that are the best in the business. So, we all compete against each other. And, our branch, for instance, the communication has to be number one. But it's not about only closing loans. It's about you're actually involved in the number one purchase of that, buying a house is better than going to Walmart and buying, a TV. It's the number one thing that you're ever going to buy. So you're a part of that. And I think loan officers forget that kind of process. It's all about clear to close. How fast can we close? But you got to have that communication throughout the process. So what you were reading, that's important for me. That is the communication from inception, right, to all the way to when the loan closes. And where can we be number one in the industry is communication and face-to-face. I have certain loan officers that do face-to-face closings. Everything with AI right now, everybody is doing, computer-generated clear to closes, and you don't even have to go to the closing table. I want to separate from that. I want us to still have that face-to-face. Look, I'm here with you face-to-face. We're not doing some type of Zoom call or Teams call. That is the big piece I want to be different, especially with the new year and this being the first podcast for you. I want to have that community reflection from the branch. So,
well, and I think too, I've had a couple mortgages done for myself over the past 5 years. I was in the mortgage business, and coming from behind the desk, coming to looking at the person and being the customer.
Yeah.
And I was like, damn, I do this for a living. And this documentation they are asking for is somewhat overwhelming to me. And I wasn't walking into this not knowing. So if I feel that way, being in the industry, how must the customer feel?
Yeah, exactly. So the competition is what, you asked me the first question, what's something that you don't know about me? You'd think that I love mortgages. I like the process that we have because it's all about the communication. Like ARMs, temporary buy downs versus permanent buy downs. A crafty loan officer can trick a borrower into, for instance, the builder statistic of, we have builders now that put people into temporary buy downs, and now anything temporary balloons up to a crazy rate that they didn't expect, and their payment's higher. So the builders didn't explain that. And now we have a whole bunch of builders that put powers in loans that are default.
Yes.
So what do you do in that instance as a loan officer? I mean, there's a reason why you get, licensed. There's a responsibility there. It's not about getting to the finish line. It's about explaining properly, communicating properly. I have one right now where we're rescuing a loan from a different investor or lender. And, it's all about when can we get closing? And the borrower's like, I'm not comfortable with this payment. I'm not comfortable with this rate. So we have to explain that. And I'd rather lose a loan than absolutely try to get something to clear to close and then have somebody have buyer's remorse on that. So to answer your question, absolutely. The number one thing we have to always do is be communicative on the rates throughout the whole process. You have your loan estimate, you have your closing disclosure, and you have your final numbers that you have at the closing table. You don't ever want to force somebody to go into something that they're not comfortable with.
Well, what I say to my clients is that I want this transaction to go so well for you that when you see me 6 months later in Publix, you're willing to run over the nice lady with your grocery cart to say hi to me, to tell me that you love your house.
Right.
Not you're like ducking down and hope that I see him and I hope that my head looks like a head of cabbage because it went bad.
Yeah. So there's I always call it the one pump chump, right?
One pump chump. So
there's loan officers that get into the business and they have the one great loan and they F it up, right? Mm-hmm. And their reputation's ruined forever. I've also seen loan officers that have been in the industry for 10 years and they have the greatest reputation. That one loan, either they rushed through the process or they didn't explain properly and their reputation's ruined because of that one loan. So every loan that comes through at least from our branch perspective, you want to properly explain the whole process. And don't depend on the title company to do that either. It needs to be on us. So that's why communication to me is the number one thing as far as that. But yeah, good point on that.
Well, I had a realtor call me quite a while back and she called me to apologize.
Yeah.
And she said, I know you're in the business. She says, I felt pressure to do a loan with a particular company because that particular company wrote out checks to the brokerage. And she said, I thought it would be okay. It was not okay. She did that loan for she did that transaction for one of her very best friends. Well, that loan officer failed to realize flood insurance was needed. Now, I have no idea how we got from, not only did the loan officer not realizing, how many people along the train did not realize flood insurance was needed?
Right.
But it wasn't. And the payment was going up like $800 a month. And this particular property was an investment. The numbers either work or they don't.
Right, right.
And she said, I knew that I shouldn't have done it, but I felt pressure.
Right.
And my thing is that, I'm sorry that happened to you, but we can use that as a good learning experience. It doesn't matter which company is writing out checks to your broker. If you don't feel like that's a good fit for you mortgage-wise, you need to go somewhere else. And I think real estate brokers sometimes forget those realtors are not their employees. They're subcontractors.
Right. Right. And look, we call ourselves the rescue branch. You're the Redhead Rescue.
I'm the Redhead Rescue.
Yeah. So, I see, I think last year we rescued close to 15 loans throughout the year, which is a big percentage, right? That's 15 loans that, originated at a different lender, one of our competitors, and switched over to us because either it was overpromised, the rate was too high, or they got to basically to underwriting, a week before closing and they couldn't clear to close it. I think that right there is the problem with the industry is we're rushing too fast and everybody's so competitive, right? Everybody's competitive. I mean, like I said earlier, like the loan officer, the title company, down to even the appraisers, everybody is trying to win that deal, but we're forgetting one aspect, the borrower, right?
There's a person there.
Correct.
Yes.
So expectations is, one of my mantras for 2026 is setting expectations. So, when I have a non-QM type of deal, which is a portfolio type of product, I'll explain. I'll say, listen, this is a tough deal. This isn't an easy FHA conventional type of loan.
Right.
Can we get to the closing table? Probably, but it's going to take a lot of levels and a lot of steps to get there. If you don't explain that properly, they think they're going to close right away. For your example, right, there wasn't proper communication throughout the process. Flood, I mean, we're in Florida. We're in Florida, right? Yeah. Flood is a constant reminder for you on pretty much 90% of your loans here.
I can't figure out. Was the whole underwriting department, was everybody on vacation when this loan went through?
Right.
And I'm like, I didn't understand how that could happen. And yet that's not the first time that I've heard a story about a mortgage went so wrong.
Yeah.
Now you said the word, you said non-QM. That's mortgage speak.
Yes.
Tell me what non-QM is.
So you guys know QM is. It's qualified mortgage. It's your government-backed.
I thought it was quick money.
It's also quick money too, depending where you go. Sure. Okay. But you have your qualified mortgage, conforming, your government-backed FHA, VA loans, and then you have your non-portfolio. And every, you have some of the, big depositories that have those programs that they portfolio. The big ones here in Florida are your DSCR, because everybody has, their investment or their second homes. And you have some of the, freelancers and self-employed borrowers that, they want to do bank statement programs. Those are two examples of your non-QM.
And a DSCR is, I was talking to a realtor in Tennessee about a deal, and she asked what kind of loan I was going to do, and I said a DSCR, and she goes, "Oh, I'm sorry, I've never heard of that." And I go, I'm trying to tactfully, how on earth do you not hear of that? And I told her what it was, and she goes, "Oh, well, that's an investor loan." I said, "Well, yeah, you could call it that."
Sure.
But okay.
Sure.
No, okay.
I mean, it's your cash flow that you're getting from your property, right? And technically, it could be investor, it's business purpose. Like I said, if you want to have everybody in Florida, a lot of people do have their second and homes and third homes, right? And a lot of people buy those in cash, unfortunately for us. But you can use those as an income flow, right? So that's a big product, right? You have your ratios where you can go 1%, one over, or you can go one under, depending on the type of cash flow you have, and we have programs for that. But again, those are very specific, and for instance, the bank statement programs. You got to have your 12 months bank statements. You got to have it calculated, and you're just basically getting your loan off those assets, right? And the QM is based on obviously your income.
Yeah.
So
QM would be everybody who doesn't live in Florida and as a regular W-2, they can qualify. When you cross the line down into Florida, you enter a new mortgage world.
Exactly.
You enter an
Exactly. But we have two things we go against us here. We have a lot of cash buyers that are probably, would say, over 50%, especially in our Naples area and some of the higher priced areas, and then you have your buyers that are looking for kind of a second home, that live in New York or they live in Ohio, Michigan, that want to have their second home out here, and then you have obviously your investors.
Well, and then with the term second home, you can have a second home without having a first home. You can have 3 second homes. Sure. And when we use these terms, I think a lot of us in the industry, if we would help the consumers out by slowing down and listening to the words that come out of our mouth, and say, if you were not in this industry, would you be able to understand the sentence that you just said? Exactly. Because you got a front end and you got a back end and you got a DTI. And where is that sitting? And, can I get approve eligible? Is there going to be a refer with caution? And they don't understand any of that. And honestly, it's not their job and they shouldn't understand it.
Exactly. You're talking my language. So, I've been doing this for 26 years. So I've seen.
When you were 5.
I did. I did. So I've seen all the occupancy type of frauds, right? You're talking my language here. So, as you know, and I have a small group right now at the branch, is that I really try to zone in and to see what the occupancy is. If you're wishy-washy on the second home versus the investment versus primary, right? Mm-hmm. I say that primary home, right? What is the difference, right? It's all about price. It's all about your rate, right? Primary versus an investment, the rates are drastically different.
Well, and
so why do people do occupancy fraud? It's for the rate difference.
Well, and that about you is that I have seen you are spot checking the files.
Yes.
You're not doing it to get anybody in trouble, but at the end of the day, there is a 4-letter agency that can come knocking on your door.
Sure.
And I didn't know, or I didn't realize it doesn't hold for them.
Yeah.
At all. And I've worked at a few different companies, so it shall remain nameless, but I have heard someone talk to the customer, their home in another state they thought was going to sell. It hadn't sold yet. The lender told them to take the home off of the market, get a friend and dummy up a lease. Mm-hmm. And I am hearing this, and the red flags are like, oh my gosh, did you just leave all sense of reason? You're showing these people the way to commit fraud.
Yeah. Yeah. So let me unpack that for a second.
Okay.
Let me go back to the partnerships we have with realtors and borrowers, right? There needs to be an honest, huddle together, obviously, when you get a loan in. I don't want to work with realtors that are committing that type of fraud, and I definitely don't want to work with borrowers that are not.
And you and I have let one realtor go.
Correct.
Who was...
Because of that. When it's wishy-washy like that.
Well, and every other word was a curse word in emails. And
correct.
This transaction's hard enough to begin with. We need to be on the same team.
Yeah. So that's why I love this podcast, right? It's real talk here. We're talking, real scenarios. So the real scenario is, I've seen realtors ask me and try to coach me. You should never talk to a realtor about what the occupancy of your borrower is going to be, right? Or your client's going to be. So first, I won't talk to the realtor about that. Number two, they should not be sending any of those conditions in or trying to prove the fact that what the occupancy is. But I've seen that. I've seen that all. And to me, it's worth getting rid of that liability, right? You could have a realtor that sends a ton of business. And if you feel that they're kind of fudging those numbers, and you don't want to be a part of that. So I agree with you on that. To answer your question, there is a gray area on the second home to the occupancy, which I agree with, right? But if it's a question of, is this an occupancy type of fraud where you feel, say something, see something, or see something, say something, then, it's worth digging further into that. And listen, I'm not here just to close loans. I'm here also to make sure that it's an honest, good mortgages.
Well,
right?
Yeah. And if you're a consumer in the middle of a transaction right now, and the lender that you're dealing with is on the phone with you, telling you to go to Staples to grab a residential lease to dummy that up, I don't care if you're 5 days away from closing. You need to run.
Yeah, I'm probably not worth ever working with that realtor again.
Ever again, yes, ever again. Yeah. And I had a situation where I had a consumer appraisal did not come in where it needed to. Mm-hmm. And my thing with appraisals is I may not always like that number, but if it is a legitimate number, can't do anything about it.
Right.
If it's not, if you can see glaring discrepancies, then okay, I will fight for that.
Yeah, no, I mean, I have some good true life scenarios on that. So last year I had 7 disputes on appraisals that I personally did an ROV, which is a reconsideration of value, and won 4 of those. And and I did that legitimately working with the realtor, getting proper comps, and you can research everything on the MLS, on the internet, especially with AI now. You could definitely help you with that, and you can win that properly. You don't have to try to falsify anything. Unfortunately, we're in a state right now which you can call it
the economy or the geographical panhandle. Or
both. We're in a state right now that I think there's a collapse here on overvalue versus what the inventory is right now, which is saturated.
Okay.
But we are overvalued. So appraisals right now are coming in higher, and the appraisers are coming back and saying that's not the value that we have. There's a depreciation, in the Cape Coral area, all up to, Tampa almost. It's been flagged that way. So It's being watched. But, I mean, a lot of this has to do with, land here. I mean, when the economy gets better, it's going to go right back where it needs to be. But we are kind of in a reset right now. So, yes, those examples happen, but you have to properly know what you're talking about when you talk to the AMCs. Now, obviously, we have an air compliance, right? There's an air independence. I always have to explain that to the realtors, like, hey, I don't control a lot of the values, but we could help try to win the argument around that.
I'm going to take 2 words that you use. I'm going to spin it in a completely different direction. Overvalued. Let's talk about those 2 words in relation to builder products and the loan process, and why, like you mentioned earlier, there are temporary buy downs that have become untemporary, and they've popped back up.
Yeah.
And when it comes to builders, why do the builders so want that consumer to use their lender and their title company?
Wow, it's a big.
I know. I have like opened up, and you know what? If you want me to back that up, we can completely. No. Okay.
I don't want to be too controversial here. Obviously, you guys know this. You being a realtor and being a loan officer too, is that builders right now in the last 4 or 5 years have attacked the lenders, right? It doesn't matter if we're cross country, it doesn't matter if Loan Depot, builders wanted that market. So, they have their own in-house mortgage companies. So they use the word.
There's nothing wrong with that.
Nothing wrong with that.
Nothing wrong with that.
Nothing wrong with that. But the issue is that they can do two things to sway these loans over to us. And I use that word sway. Over.
Okay.
Right? They say, hey, we could give you a huge concession, right? We can give you a huge seller concession.
Now, what's a seller concession? If you had never bought a new home and somebody said seller concession,
Correct.
how would you...
Right.
What does that mean?
In layman's terms, regular speak, it's just I'm going to give you money for your closing costs. I'll help you with close your loan. I'll give you, money. Basically, builders will tell a borrower that's never known what a mortgage is, like, hey, I'm going to give you 10 grand, 15 grand
because
to buy your house.
Because money's free.
Because money is free.
Because money is free, and you can just have as much as you want.
That's right.
And that would be.
That's right.
Yeah.
So to unwind that, they did that for the last 4 or 5 years, and they have a pretty big market.
They do.
And so FHA has a list out there, a default list.
It's a naughty list, maybe, or a list that you just don't want to be on that list.
You don't want to be on the list. So they.
And I've been on a lot of people's lists before, so I know you don't want to be on a list.
Oh gosh, whoever's watching this knows that I'm on everybody's list as well too. But. So they have a list out there that sees, well, who's in default, and they watch that very carefully. I mean, Rate has, probably a percentage of the market that, they watch that very, very carefully. There was something that came out, I don't know, about 4 or 5 months ago that build the top 5 builders, Lennar, down the road of all the builders that we have. All of those.
All of them.
So they have their biggest percentage of defaults are through the top 5 of the builders.
Yeah, and
Pulte, D.R. Horton, Lennar.
Yeah, and full disclosure, they are doing a lot of volume, so therefore it would make sense that if you're doing the volume, yes, you are absolutely going to have, because people lose jobs, people get divorced, things can happen shortly after the purchase of a home that make it such that that homeowner can no longer pay for that home.
Correct. So when you use the word temporary, there's temporary always scares me. Back when I used to, in the 90s and 2000s, there would be stated income loans, which is Liquid Express, Ninja
loans.
All of those, those were the pre kind of crazy, 2008 collapse. But anything you say, anything with balloon or temporary, you got to really explain that to the borrower, because if they don't know that their rate is, at 5.5, but then it goes up to, in the 7s, you got issues, right? Because the payment goes with that. It's a temporary payment. So we're noticing now that a lot of the builders have those, those homes that they took from the lenders and promised, the world to these borrowers. And what we're having right now are defaults, right? I think there's a big issue right now where there are defaults in the industry. And I not that I'm celebrating it. It's actually very sad, but it's
horrible for the people living in that home, because especially a new home, you had dreams and you saw raising a family in that home, and now you're getting served from the sheriff's department.
Exactly.
It's not good.
Exactly. So I think right now we just have to focus on resetting, right? And there's going to be a refi boom if there's a continued refi boom, because rates continue to get better. I mean, I predict right now rates are on the 6s, right? Are they going to get in the 5s and 4s? Maybe it could be, but right now it's let's focus on getting to the root of the issue of a lot of these mortgages that are overpromised by some of the builders. I'll add one more thing about the builders. A lot of those loans that came through that were rescues, those were builder loans that they couldn't do. I had one where we had a VA veteran, obviously, my veteran affiliation. I don't know how you decline a veteran in this world.
Right. Well, but that is one thing that really frustrates me on the real estate side, that realtors will tell their sellers not to take a VA buyer.
Yeah.
And I had a discussion with a particular listing agent who'd said that. I called and I said, got a question for you. This person was willing to lay their life down on the line for our country, and we're okay with that.
Yeah.
And now, because we want maybe a little more protection for a veteran, you want to tell your seller not to take that.
Yeah, because it's a veteran. Yeah, it's sad. I think, first of all, it's great press when you close a veteran, right?
Yeah.
I've taken a lot of veteran loans that couldn't close with the builder or different investors, and I laugh. I'm like, there's got to be a way. I mean, you have manual underwrites. You have, there's really no credit score minimum on a veteran. I mean, you could figure out a way, even if you put it on the back burner and help them, whatever their scenario is, if they have possibly a bankruptcy, or there's time there that you can wait on. But any veteran that comes through the door, we're going to get that. I think I'm pretty much 100% on any of those. So, to your point, that's bad press when you don't close on a veteran, or if you overpromise something to a veteran and you can't deliver. It just doesn't sound like good business.
Well, and you said that, some of those rescue transactions, it was a builder. And I think a lot of people would be under the impression of, well, it's a VA loan. If the buyer can't get approved, then you just can't get approved, because why would one company be able to approve it when another one could not?
Correct. Goes back to expectations, right? Mm-hmm. Right. So if a veteran comes, let's say they have a 520 credit score, right? And they have no money, right? Mm-hmm. And they have just a ton of debt. So what do I always say, right? Either you have a ton of money and low credit, I can work with you on that. Right. We can go non-QM, or you have no money, mm-hmm. and I can do a down payment assistance if you have good credit.
Right.
Florida Housing, loves the veterans loans. But again, it's setting expectations, because if you don't set the expectations with your veteran, mm-hmm. you're going to disappoint them. Because easy veteran loan that's in the 600, 700s with no credit issues. I mean, that's all day, right? But there are a lot of veterans that, that fallen behind, right? And it's our job not to just give them the mortgage, it's to be the money people to help them through the process. And if it's 6 months down the road, if they do some type of credit repair, or if you help them, get them into a down payment assistance program, it falls on us on that. It's not just about clearing that loan. So,
yeah. Well, and when it comes to veteran VA loans, if you've turned on the TV at all, you're going to see commercials all day long from a particular company, and the word veteran is in the name. Mm-hmm. And that leads you to believe, if you weren't familiar with the industry, that is somehow directly connected to the Veterans Administration, and there's like a secret path, and they can help you out.
Yeah. So USAA and Navy Federal, I'll have to talk about them. I mean, they're credit unions. They don't really offer that much. We have actually a program here. Obviously, we waive all of the closing costs, the $1,490, uh-huh. Which is the average in the industry. We waive that. I go above and beyond and give a little bit extra lender credit, obviously, because of my affiliation. But just because it's Navy Federal, or just because it's, a lot of, like you said, in the military type programs, doesn't mean there's a clear path. But we've won over a lot of those other ones. Again, it goes to expectations and actually doing honest, good work, and not just trying to, be a used car salesman.
A one chump. What did you call it?
Chump, yeah. I know that might be edited. I don't know. It depends what your son does.
Okay. I want to get back to you. When I was working for my prior company, I got a call one day, and it was a recruiter. And the first thing the recruiter said was, hey, he liked my picture when I was standing next to Herky the Hawk, which Iowa doesn't have any pro teams, so they really get behind. There's the Iowa State Cyclones and Iowa Hawkeyes. And he said, I saw it on Facebook. And I was willing to listen to him. He had done his homework before he ever picked up the phone. And so I said, sure. So, either I'm going to speak to that recruiter, mm-hmm. and it's going to confirm why I am exactly where I should be, or it's going to open up a door that I had not, wasn't aware of. Yeah. So I, meet with your boss, and then I meet with you, And we start, and then you got an email, or was it a phone call? I called you one day.
Yeah.
And do you remember that?
Yeah.
Tell me about that.
Well,
I'm laughing before we even start this.
Well, can we backtrack a little bit? So recruiting. So I'm sure you're getting recruited all the time, even now. I mean,
Everybody
you could say that, and it's funny because I have loan officers that doubled their business on my team, and it's these recruiters, they follow script. So obviously they know everything about you. You're all public online. Everybody can look everything up about everybody and pretend like you're a mentalist and you know everything. But it's BS because they follow script, and for them, those recruiters are not in the day-to-day on the front lines.
No.
What they could say to you and throw the shiny red objects for you is, hey, we're the best company here. We know how to close loans. Yada yada yada. But they're not on the front lines. None of these recruiters are. I don't recruit. When we spoke, right, I told you this point blank. I'm on the front lines with you, right? My license is on hold. I don't compete against you. I'm not a branch manager that produces, but I technically do produce because I'm with you on the front lines. A lot of these recruiters don't even know what branch you're going to go or where you're going to go. They probably wouldn't even know how to spell FHA, right? But they follow a script.
They wouldn't know how to spell FHA, and they got the whole alphabet.
Exactly. So my point is they don't know mortgages, but they're great at recruiting because they know how to talk. So when they say, hey, I saw you, next to this, that was their end to get your attention, which is crafty, right? Yeah. I'm not really a salesperson, but I do work with salespeople because I do what I say, right? And that's the main thing. To your point, when we first met, I heard some of the kind of the bad.
I'm already laughing.
No, I heard some of the bad and the good, right?
Yeah.
And I think we met for lunch, and I said, hey, whatever I do and whatever I say, I will stand up.
Right.
And this isn't a sales ploy to try to get you on my team.
Right.
I think I've proven in the last couple of years. But again, it's very important. The whole moral of this whole podcast is doing honest mortgages.
Do the right thing.
And do the right thing. And I told you that at the recruit. I said, I'm not here to compete against you. I'm here to double your business. I'm here to help you grow. And I think that resonated with you. So.
Yeah, it really did, because I had heard, and I didn't know, it's kind of like Chupacabra, the Loch Ness Monster. You've heard that there are branch managers that don't also originate loans and compete against you. Oh. You've heard that they exist, but I sure haven't met one.
Yeah.
And then I meet you, and I kind of scratched my head. I'm thinking, well, he doesn't originate loans. Yeah. He's got a license. He's parked it. He could be making a whole lot of money if he was originating loans.
Yeah.
And that kind of intrigued me, because I had heard from another lender that I know that this person he once was at a place that had a branch manager that branch managed.
Yeah. Yeah.
And I fired up my laptop one morning, and there's an email, and it's from you. And it wasn't to me. It was to the title company and the realtors. And the look that I have on my face right now is because it happened 18 months ago. So now, but tell me what I sounded like to you and how you dealt with.
No, I mean, I'll go back. So I don't know how a producing branch manager how do you manage loan officers if you're always producing?
Right.
So, how is that possible? Like, if I competed against you in Fort Myers and Cape Coral, and I'm also getting loans, and I'm going after your realtors, but you work in my branch, that doesn't make sense.
It's like the sound of one hand clapping.
I never understood that, and so that would bring credibility away from me, and I think you'd get sick of it. I think, to your point, I think when we first started, it was communication. And there's three things that I always say with communication is be consistent, right? So you saw, that I was every morning sending an email.
Oh my gosh. Oh my gosh. This man you have no life.
Yeah, I don't
except for murders. It is emails at 4:45 in the morning. It is emails at 9:30 at night. You're closing out your day.
Yeah. But it's
unbelievable.
But what does that tell you? So that separates us in the market. I don't think any other branch is doing that, right?
No.
So it's consistency, right? It's setting expectations.
Yes.
So I would tell the title company, there used to be this stigma is like lenders and title companies don't get along. That's crazy because the title company is going to be your number one advocate for you for future business.
Okay.
Right? When you go to the closing table, that person has family. Title company might say, Kimberly Lang did an amazing job getting this thing closed. Title company might hear that. I'm like, hey, let's promote Kimberly Lang. So I never understood why the communication wasn't there for title companies and lenders. It was this whole thing of like, let's just, they're both against each other. No. So it's consistency, always setting communication. And number 3, it's having compassion, right? So you have to understand title companies have their timelines. There's people that, you can't just say, hey, we're closing on the 10th without saying that. Also our clients, right? They're going through a stressful time.
Yeah.
So giving updates on a daily basis.
Right. Yeah, stressful. Yeah.
So once you give those updates on a daily basis, they calm down.
Yes.
Because this, you're a realtor, right? How long does it take for you to get frustrated if you don't hear about a loan after 2-3 days? Can you imagine a week, 2 weeks? Sometimes lenders wait 3 weeks to give updates.
Sometimes lenders
don't even give updates.
Don't even no.
So I believe that you have to. This is non-negotiable. You fought me a little bit in the beginning about it. I said there's got to be a daily update of some sort.
Right.
And it can't be automated by AI. It needs to be coming from either a branch manager or a processor, where they say, hey, Kimberly Lang has an army behind her. It's the face of her loan. She's closing the loan. But behind her, she has a branch manager that has compassion and a processing team that cares about their loans. And that's how you build a name in a community.
Yeah. And right now, as we speak, though I look 33, I am actually 53. But when this happened, I think I was maybe 51 or 52. Yeah. And namaste.
Right.
And I amaze myself sometimes at how good I am at keeping my mouth shut compared to how I was in my 30s.
Yeah.
And I don't know if that's wisdom or I'm just too tired or I need to pick my own battles. But I looked at that email and I was like, wow, it's early. I mean, he's 5:30 in the morning. And I remember calling you on the phone. Michael, got this email. And you said, yeah. And I said, why'd you send it? And I remember saying, why'd you do that?
Yep.
And I didn't even know what I didn't even know.
No. So I wake up about 4 in the morning every day. It's military mindset. It's something that's been driven in me, right? So between 4 and 8, I work out pretty much at 7:30 and 8.
Okay.
I get all my stuff done in the morning, right? So when you guys wake up at 8 or when you guys start working, I should say, I've already done half of my day. And so I do, my calendar updates. I do all the emails, updates. So title companies. So if you notice in the last year, 2 years that you've been here, it's been quieter on the title side. It's been quieter on the even the borrower side or in the realtor side, because they have those updates. They're not stalking you and saying, hey, Kimberly, what's the status of my deal? That's already taken at 5 in the morning. So you can go out there and bring business in to us. So that was probably your biggest culture shock because you didn't understand that, but now you do.
I was completely caught off guard because prior to, the only time you were really seeing an email from a branch manager to anybody in the transaction about the transaction was because they were putting out a fire.
Yes, the bad news. It shouldn't be about that. It should be that. I think you do a good job when you get a loan or you get a borrower that's pre-qualing, or you explain, hey, I have a team behind me. You'll start seeing updates from Michael Perel, who's the branch manager.
Right.
So I think that gives you confidence to go out there and give loans. And how we started this conversation, it's consistency. Right. It's having that constant communication. That's going to beat out all the technology in the world. AI, borrowers are not going to want to use AI as their mortgage person. They're going to want to use Kimberly.
Right.
If you're going to sit behind and let AI do all the automated stuff, forget about it. We might as well be Rocket Mortgage. Our part is we are a real branch with real people out there. Real people. So in the community. Right. That's what my mantra this year is being in the community, right? And having that community feel to it.
Absolutely. Well, I think that I pretty much scratched the surface of our conversation today, but I absolutely do want to have you back because I think that there is so much more that you could shed light on when it comes to the industry as a whole. Parting question for you. Why should somebody pick up the phone and call rate versus clicking on something that they got in the ad?
Yeah. Well, why should somebody call us, Kimberly? What we just talked about. We're real. We're real people. We're not behind computer generated approvals. You can pick up the phone and call Kimberly, me, the branch, pretty much from 4 a.m. as you learned today, to 11, 12. I've answered questions at midnight before with clients that were having anxiety about their loans. I think it's all about real. It's about real mortgages and doing good mortgages. And if you really do want to ensure that you have the biggest purchase that you're ever going to make, right? Especially if your loan averages are $400,000 or $500,000, you are definitely guaranteed of a proper clear close that is not forced, rushed.
Yes.
And there's no kind of backstory of like, oh my God, Kimberly forced me into this bad loan.
No, I'm not going to do that. No. Yeah. So. Yeah. Because my head does not look like it would be a head of cabbage in the produce department. Yeah. I'm totally comfortable with them running over the old lady.
We'll say something about you. So I think you're kind of a unicorn in this industry. I mean, you are a realtor, and you're a loan officer. So, which is approved, which is perfectly fine to do, which is crazy because if you've never been in a realtor's shoes and you're a loan officer, you have no clue what a realtor's been through. They spend weeks, months, sometimes not getting paid, and they just go through open houses, and then a potential borrower might say, I'm going to rent after 2 months of shadowing them on a house. Meeting those closing dates is so important for a realtor. Yes. And if you have a loan officer that, let's say, is a bitty loan officer that doesn't really care, and you have that one loan that you depend on, a loan officer really needs to put themselves in a realtor's shoes. So I love having you on the team for that instance. But, I love that you have both sides, right? That's very hard to find these days. You have loan officers think they can be a realtor, and then you have realtors that think they can be a loan officer, but they're two very distinct type of professions that are kind of stuck to the hip together, so it's awesome.
Well, and I know I said I was going to end that, but I do want to elaborate a little bit on that. People have asked me, if you were a realtor for quite a while, why did you then decide to become a lender? Yeah. Because they're not the same. I mean, the big shiny object that's moving is a house or a condo. Yeah. And the reason it was for me is because I understand numbers. That's the way my brain works. And if I have 8 different loan options that one of these is going to work, I'm going to do mortgage yoga to figure out what do we have to submit? Yep. What do we have to show? What can you qualify for? What I'm not going to have is an investor telling me they don't want to buy this property because they don't like the countertops.
Right. Well, this is where your strong suit is. I mean, you have both sides.
Yeah.
So you really can take a client through the realtor side, which clients can get confused, especially if there's a bad realtor that's not giving them the right advice how to buy a house. And then you're also the money lady too, that you're helping them through the thing. So that's why I call you a unicorn. You have both sides pretty locked down.
Yeah.
So anybody that's not using you is crazy.
Crazy.
Yeah.
Well, like I said, you're one of my favorite people. And I don't say that.
Thank you.
I don't say that.
I think your son is probably number one, but
He's around somewhere, but, you know.
thank you.
But I just so enjoyed having you.
Thank you. Thank you for, I'm honored to be the first one.
You are the absolute first.
Right.
We saved the first.
For last.
Best. First best.
There you go.
I'll figure out some rhyme.
All right.
I'll figure
Love
out
that.
some rhyme.
Thank you. Thank you for having me.